What's going on, everybody? Welcome to another episode of the TinkerTribe podcast. I am joined tonight with returning guest Jay Young. Jay and I had a really great conversation the last time he was on, and we are going to talk tonight about the topic of Bitcoin and its recent movements to new all-time high, and some stuff that's going on in that space. And I'm gonna play a little bit of devil's advocate for Jay on some things for Bitcoin as well tonight. Jay, welcome back. How's it going, man?
It's going really well. I just want to let you know that I sent the link out to our last conversation to several friends and colleagues, and I got some really good feedback. So kudos to your interviewing skills, my friend. And I think we're doing good things here.
Oh, thank you so much, Jay. I really appreciate that. All right, so yeah, we're just starting off tonight. So we're entering a new all-time high with Bitcoin, and recently, I guess the price I checked earlier today, somewhere around 72,000, something like that.
Something like that, yeah.
And lots of things going on. We were talking a little bit before the show started about some of the things that are happening, and seems like some big movers are entering the market
Yeah.
with Bitcoin. And what would you where would you like to start with this? Where would you like to do, one of the articles or anything that you sent me that we could
So
cover?
yeah, so that's a good idea. Let's go with that, and maybe we can kind of talk a little bit about um, the base case for Bitcoin, right? And that is ideally Bitcoin is the solution to inflation and capricious and ad hoc monetary policy, put forth by our governments. And I sent over just for the audience, I sent over three links to Greg, and we may or may not be able to pull it up, but to while we're kind of going through that, I'll give some of the TLDR. What we are seeing is that Bitcoin is making all-time highs, not just the United States dollar, but in a slew of many other currencies around the world. And at first glance, it may seem like, oh wow, okay, it made new highs in India or Pakistan or Turkey, Uzbekistan, so what? But the United States is only 4% of the world's population. There's another 96% out there that our 4% is competed against for this truly global 24/7 market we call Bitcoin. And I think that's really important to put that in context. Um, and so there's this article. There is a tweet that was put out by Balaji Srinivasan. I think he's the CEO of one of the major exchanges, where he talked about several currencies making all-time highs, and he even showed that there are the majority of kind of our top 20 currencies in the world are making all-time highs. And by the way, this was last week, early last week, I think, before we hit the 69,000 all-time high for Bitcoin. So yeah, there you go. That may be the link right down there, Greg. And it's kind of a spinner. It shows how Bitcoin is hitting all-time highs in all these different currencies. I don't know if it'll show up, but it's important because I think it shows that the world is just starting to turn this super carrier of mode of thinking around, and we're starting to see that people are starting to catch on that Bitcoin really is the solution to inflation and to removing government from the ad hoc and capricious uh, nature of monetary supply management and manipulation.
Yeah, so where we're looking at this one of these charts here, and what is this showing? Just a comparison of where the Bitcoin price is versus different currencies.
Yeah, so it's a little difficult to see, but I think I can talk to this one. So basically, what we're seeing is that um, the value, if we value other currencies in against Bitcoin, the value of these currencies is just going down all the time. And I think that's kind of the base case that we're looking at here, and that people are starting to realize is that they're losing purchasing power in their home currencies, and that in a way Bitcoin is their escape hatch from that. And we've seen this in regards to other places like in Venezuela, where they've had uh, either high inflation or hyperinflation. And the people are starting to realize the only way that they can preserve their value, or that storehouse of value, is in Bitcoin. So United States civilians or citizens are actually competing against citizens in Venezuela for this very limited asset.
Okay. Um, yeah, there's interesting stuff going on as well as with the recent election down there in
Yeah,
Argentina of Javier Milei, and I guess it sounds like what they're doing over there is very similar to what has been done in El Salvador with the adoption of Bitcoin.
I think so. I don't know exactly. Obviously, Millet promised quite a bit, and I'm not going to say he's a blowhard. I just don't know the man at all. But he promised a lot during his campaign. From what I can tell, it looks like he's starting to carry through with his promises and all these things. And I think Bitcoin is a really good encapsulation of trying to bring about responsible government that's a good steward of the people's money. And I'm really hopeful with that. And I think that he saw how well things went for President Bukele in El Salvador, and he's like, you know what, there's something to be said for this, the way he's going. And I think we're also seeing this for, and I apologize if I get this wrong, the Emir out of Saudi Arabia met with President Bukele just a few days ago, maybe last week, and I think the Emir was looking to the president of El Salvador for like, hey, what's your playbook here? What did you do? And I wouldn't be surprised if we start seeing not just the Saudi Arabian sovereign fund getting into Bitcoin, but more countries slowly start trickling in, titrating in out of their currencies and into Bitcoin.
Yeah, it's really interesting, and that more of these countries are adopting that as we see more inflation, happening in the U.S. I'm sure it's happening all over the place, but it's almost like the Gresham's law happening
That's right.
in front of our eyes right now,
Yep.
and maybe this is the trend that is gonna be pushing into the future. Now I have some, you know, maybe the best. They say the road to hell is paved with good intentions,
Yeah. That's right.
and that's some things that I wanted to hit on a little bit tonight. But
Yeah.
let me pull up this other article that you had shared with me. I think these are the ones that one was talking about all the countries, and then this one, I guess, also is showing all the countries. But let me pull that up real quick.
Yeah, I apologize if it's a little redundant. I just wanted to give you some different sources. Yeah, there you go.
So
So yeah, so what I like about what Balaji put out there is those 30 countries represent 60% of the world's population. That's pretty, in my humble opinion, that's pretty significant, right? This is people voting with their feet, and in many ways, this is the real beginning of the de-dollarization of the globe. We go back to the Bretton Woods Agreement of was it 47 or 48? I apologize for not being exact on that. But the Bretton Woods Agreement really tied the rest of the world to the dollar, and then the dollar is theoretically supposed to be tied to gold. And after 1971, August 15th, 1971, we completely got rid of that arrangement. In a way, the United States defaulted on its obligations to be hard tied to gold. And so I think that countries are starting to see this, that basically they're kind of getting they're getting the shaft right now, because they've tied their currency to the dollar. And if you look up something called the milkshake theory in regards to Bitcoin, the United States can
My
extract
policy tends
value
to
out of
be
other countries because we can print our currency ad hoc and basically give worthless pieces of paper for actual real assets. And so countries, I think they're starting to get sick of it, and they're starting to realize this is a raw deal for us, and they're slowly titrating over to Bitcoin for the purpose of de-dollarization.
Interesting. What are your thoughts on this as far as is this a new time period like we were in you know removing well, I mean, we're completely decoupled from anything that is sound money right now currently.
That's right. That's
But
right.
is this a new change in the game? Is maybe people are going to be tying things as the Bitcoin as the underlying asset?
Yeah.
Uh, you
Yeah.
know, these big institutions seem to be getting in on board currently as well with BlackRock, from what I understand.
Yeah. I think that's a good point you're alluding to. Is if we look back historically, so if we take a look back at, I think it was 1252 when Florence in Italy created the florins, and it was 3.5 grams of gold. And that was so popular that about 150 other city-states in Europe copied that. They had their own stamp, their own insignia of what that coin should be, but they were all the same fineness and the same weight of gold. So it became a unit of account, right? And it was so popular because it was tied to basically the second law of thermodynamics, right? It was tied to work, actual opportunity cost. And that's so important. And I think that, and we also saw that from 1871 to 1913, when we had a hard money standard in countries like the United States and many parts of Europe. And we had a great period of innovation and advancement and wealth preservation during that time period. So I think we're kind of seeing essentially if we could call 1251 the beginning of the age of enlightenment, right, in out of Europe, the first age of enlightenment. I think we're seeing Bitcoin as the second age of enlightenment here, because people are saying, you know what, truth does matter, and we want our money to be real money, right, good money, and we want it to be tied to the universe. We want it to be tied to reality through the second law of thermodynamics, and that's so important. And it's, some would say that the ETFs are driving this. I think that's definitely a huge factor. But when we have 60% of the world that has access to Bitcoin through these other currencies, that's a true grassroots development, a true grassroots demand that's going on.
We also are approaching the halving of
Mm,
the newly minted Bitcoins,
yeah,
which makes it even more scarce to buy Bitcoin from the miners.
yeah, that's right.
And so your only other options, I guess, are people that are holding. And if they're not, if they're diamond hands, then,
That's right.
um, you're going to have to buy it from the miners. So it's
Yeah.
going to be interesting there.
So with that, so this gets back just plain old regular Econ 101, right? Is we all learn about the two kind of basic tenets of good economics is opportunity cost and then supply and demand curve, right? And I think that we're seeing that theoretical supply demand curve is playing out in real time, in good faith, right? And when government cannot get in the way of that demand, and they can't get in the way of the supply. What's happening is exactly what you just said, and we're seeing this writ large. It's really starting to amplify in regards to the ETFs. They're gobbling up very roughly on a daily basis about 10 times as much as what the miners are putting out. So right now, the miners put out about 900 Bitcoin per day. It's very close to that, and the ETFs are gobbling up anywhere from 9,000 to 12,000 Bitcoin on a daily basis. So that's literally about 10 times as much, and it's very much what you just talked about. If they can't get it from the miners, they have to go to the rest of the market. And so there's that enticement, there's that bidding up pressure that has to happen out there. And so that, Bitcoin really is kind of that perfect inelastic um, asset that we've always heard about in Econ 101, but there really was no such thing as a truly inelastic supply, right? At least for something that's broad based. And now Bitcoin is that thing because only 900 could come out every day. And so, going to your next point, which is spot on, around April 20th is going to be the halving. So we go from 900 to 450 on a daily basis. That means if the ETFs continue with their current rate, they're going to be gobbling up not 10 times as much, but 20 times as much as what the miners can put out. And to add to that is we're seeing that the number of Bitcoin that are put on the Bitcoin exchanges that are there for trading, available to trade, that's been going down for I think over a year now. So people are starting to see, there's some demand coming along. I want to get my Bitcoin off. I want to put it in cold storage. I want to put it in a wallet, right? That the exchanges can't have, and I want to hold it. And it's very much what you talked about, the diamond hands. People are like, you know what? I've seen the story before. I've gone through a couple of 80, 85, 90% drawdowns. No big deal. I get it. And it was some very high percentage that we can see on the blockchain of something like 70% of people have held their Bitcoin for 1 year or longer. You know what? That means these are the true believers, right?
Yeah.
And they've been through the shitstorm, if you will. And they've iron sharpens iron, right? And they've been through the fire. They realize what's going on. It's nothing new for them, and they're like, "You want my Bitcoin? You're going to have to pay." And this goes into something that a gentleman with a synonymous name of Plan B talked about in his stock to flow ratio model. So if you look up Plan B stock to flow Bitcoin, you'll see this model that he developed, which basically makes the price of Bitcoin a function of the number of Bitcoin that are issued every day. So when we go from 900 to 450 issued every day, we're going to see that that's going to make a huge difference, and that pushes up the price, because the price is the only thing that can adjust if demand doesn't change but supply keeps going. Or I'm sorry, if demand goes up but supply actually goes down.
Okay. Um, so this stock, what is this? Stock to flow model.
Yeah. So basically, the inverse of stock to flow is inflation. Okay. So if we talk about gold has had historically around a range of 1 to 2% inflation, meaning gold is coming out of the ground and being put into the normal supply, the available supply of gold. So let's just call it 2% for ease of math. Well, the inverse of 2% is 50, right? That means that it would take 50 years of 2% growth to double the amount of gold that's available. So with that, since the amount of Bitcoin that's been brought up has gone down by 50% every 4 years. Right now, we're about 1.8% of an inflation rate, which translates to a stock to flow ratio. So 1.8%, the inverse of that is 60, right? When we go through this next halving in about a month, it's going to go to about 0.9%, or about 100, 110. Okay. That puts it on par with gold, right? In terms of that stock to flow or that inflation rate. And
Mm.
so that what Plan B was saying is, and it was a fascinating thing. I never would have thought of this. Is that if we put things in terms of market capitalization, meaning the price of an ounce of gold times the total ounces of gold available, that gives us a certain market capitalization, right? And he shows it's a function of that stock to flow ratio. For gold, it's about 100. For Bitcoin, we can say the same thing. We take the price of one Bitcoin times the total number of Bitcoin that are out there. That's your market capitalization. And if you if we cut the supply that's being introduced in the market by 50%, it gives us a value of about 100. Same thing for gold. That means we expect at sometime in the not too distant future, roughly 4 years, the market capitalization of Bitcoin will be just about the same as gold. And right now, depending on how you measure it, the market capitalization of gold is between 8 trillion and 12 trillion dollars. Well, let's just use easy math. Let's just call it $10 trillion for gold, and that's the market capitalization. Well, if we run the math, $10 trillion divided by 20 million Bitcoin, again, easy numbers, right? You're looking at $500,000 per Bitcoin.
Yeah, yeah. Right. So, yeah, it's kind of a way to analyze where that where that price point could go.
Yeah, that's right.
And I mean, trillions are being printed every day now to
That's right.
send off to foreign countries and everything right now currently. And so the purchasing power of our money is completely being deteriorated. So is everything going to be started to be uh I mean, the dollar seems to me that would no longer be a good measurement of any type of wealth because it's being completely diluted in value, and hard assets like the precious metals and Bitcoin, uh, you know what in that scenario where
Yeah,
Bitcoin
yeah,
is like $500,000 for a Bitcoin, you know, does that mean the Bitcoin guys are going to be buying Lambos? Or are you going to be able to buy a condo for that?
So
What are you
okay,
talking
so
about?
you're bringing up a good point, because what do we see happening is we see the total number of units expanding exponentially. Because that's really what this comes down to, right? To use the economic terms, the units is expanding exponentially. And what that is, what you actually pointed out, is printing of dollars or printing of any fiat currency, right? So what Plan B is promoting, or what he's explaining in the model, and I hope I'm explaining well, is that that's in today's dollars, right? So if the governments start flooding the market with their respective fiat currencies, then the market capitalization for gold will increase in a commensurate fashion. The market capitalization for real estate, the market capitalization for silver will increase in a commensurate fashion, right? And then the the idea is that thus the market capitalization for Bitcoin will increase in a commensurate fashion as well. So what we call uh, 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 let's call it $10 trillion today in gold market capitalization. We both know that could very easily be a $20 trillion capitalization, not because gold's gotten better, but because there's just more units of fiat currency that are floating out there, right? And so that's the adjusting factor. I hope I'm speaking clearly on that.
Yeah, I mean, the I guess the maybe the point I'm attempting to get across is like, so Bitcoin can be used as a store of your wealth, and is everyone else getting left out to dry if you're
All
not
right, that
holding
that's a good
something
question.
like
So
Bitcoin?
yeah, that's a good question. So I think it was a gentleman by the name of Max Kaiser. It may be someone else. You may have to double check me on this, but he wrote, everyone gets the Bitcoin price that they deserve, right? So it doesn't, so the price of Bitcoin going up doesn't preclude anyone from buying Bitcoin, because any one Bitcoin can be subdivided into 100 million units called Satoshis. So all it means is that it takes, there's two ways to look at it. Either it takes more um, units of fiat currency to buy the same amount of Bitcoin, or the same amount of fiat currency buys fewer Bitcoin. right? And this gets into that whole concept of the supply demand curve and that theoretical asset that that no one ever thought about, of that perfectly inelastic supply, right? And this is what we're seeing is the market is starting to realize, oh, sugar, I'm going to be left behind. And we're starting to get FOMO, fear of missing out, right? And so how much of that is momentum and how much of that is fundamentals? How much is a psychological momentum, like a FOMO? And how much is like, oh, okay, there are actual fundamental reasons, philosophical and economic reasons for this. I need to transfer, I need to titrate over from bad money to good money.
Now, do you think we're on the cusp of that right now, or is this just a wave of some of these big players coming into the market and causing um, this big run up that we're seeing right now?
Um, my shorter answer is I don't know. I think that, so this kind of, you bring up a really good question, right? Is in regards to what are the contributing factors, right? Because if I think if we talk to a hardcore Bitcoiner, a Bitcoin maximalist, they don't care about the price of Bitcoin in the sense of like how many Lambos does that get me. They don't care about that, right? For them, the price of Bitcoin is a report card, if you will, right? Of levels of rightness that we're talking about here. So I think that what we're seeing is really a spectrum, right, or a continuum of the market transforming. And so we've seen this since um, I'll say since the exchanges started coming on board, right? So we had Mt. Gox, we had Coinbase, we had Kraken, Gemini, um, uh, Bitfinex, I think, is another one. So those were where people could just start exchanging fiat currencies for Bitcoin. So that was the beginning of it. And then once more institutions and companies and entrepreneurs started to see what this thing is, this thing called Bitcoin, and they started to look at the current paradigm of our financial rails, right? The payments system. They started to say, oh, wait a second, maybe we can add some payment rails here. We can make it easier to exchange Bitcoin for stuff, right? Coffee at at a Starbucks, right? So they start installing the plumbing, if you will. That way, people can actually buy regular stuff with their Bitcoin, right? That's one thing. And then the next thing is kind of what you talked about is the value that they get out of this. And so I think the ETFs are just one line of plumbing in a long line of plumbing, that the spectrum, this continuum of continuing to add more and more on the back end. And so now with the ETFs, because all ETF shares, they're shares of stock, right? And so with that, that adds a regulatory and legal and financial framework or wrapper around those shares. And what that allows pretty much anyone to do now is they can actually buy shares of stock of Bitcoin. Now, the shares of stock of Bitcoin, they're just a proxy of ownership, right? It's a claim on something, which any Bitcoiner will tell you, don't do that, right? Go buy the go buy the actual Bitcoin. But I'm glad that it's there because now it's allowing these institutions access to Bitcoin that they couldn't have before. So they can start to put um, a proxy of Bitcoin on their balance sheets. And that's important because now we're starting to see that we have pension plans, we have any sort of superannuation, which is the term they use in like Europe and Australia for retirement plans, insurance companies, which are trillions and trillions of dollars of funds just waiting on the sides, right? Sovereign funds, publicly traded companies, privately traded companies, right? They can all start to put this on the balance sheets. And if we're talking about 1%, that is a wall of money that's going to start coming in. And then we take a look at what Fidelity and BlackRock are probably going to start doing is, yes, they have the Bitcoin ETF, but they're also going to start adding in maybe a half, maybe 1% of Bitcoin to their other funds that are out there, because that's considered, like you said before, that's good money. That's Gresham's law, right? So they start wanting to get that Bitcoin and pull it off the open market and put it on their balance sheets. So think of the effects of that, where sovereign funds and these massive funds like BlackRock, which has $10 trillion in assets under management, if they merely convert 1%, that's $100 billion that's going to come rushing in from one institution amongst literally thousands of institutions.
Yeah, I mean, so they're one of the biggest funds in the world, and they're buying up everything, man. They're buying up real estate, they're buying up all of the things.
Yeah.
And so, you know, is it does give me some pause here because the like I said earlier, the road to hell can be paved with good intentions.
Yeah.
And Bitcoin being the invention that it is, it's not controlled by any one group or anything. You have to have 51% of the mining capabilities to be able to do any kind of attack on the network or anything like that. Is this since some of these big institutions are getting in? I kind of want to get your thoughts on some of that
Yeah.
because is it almost seems like if you can't beat them, join them in a way,
Mm-hmm.
and that they're using it as uh, so these ETFs tied to Bitcoin. So how exactly how are you creating this ETF tied to this asset Bitcoin? Isn't that fundamentally like a derivative of Bitcoin by
Yeah.
holding
Well
it
said.
in
That's right.
an ETF? So
That's exactly
they
right.
hold the coin, and you get to say you have a derivative of the coin they're holding
That's right.
on the books.
So you're 100% correct. Let's take it one step further, because if we're talking about BlackRock or Fidelity or any of the other ETFs, they actually are not holding the Bitcoin internally in their company. They're typically, the vast majority, they're holding them at Coinbase. So companies like Coinbase and I think Gemini has specialized in offering custodial services, right? And quick side note, I think more countries are starting to become friendly to the idea of banks allowing custodial services for Bitcoin. So here's the funny thing about it. The shares of Bitcoin that are out there are actually a derivative of a derivative of a derivative. So there's the Bitcoin that are actually held at, let's say, Coinbase, right? And then that's collateralized. That's let's say we talk about BlackRock. They would then take that. So they have these I'll call them CDOs, collateralized debt obligations, just for now. Maybe some other type of derivative, right? They then take this one large piece, they then chunk it up into other shares, and then they sell those shares in the open market, right? So we then have institutions and individuals who own these shares, which are a claim against BlackRock, which has a claim against Coinbase, which says it owns or is custodying the Bitcoin, right? So
Hmm.
does that kind of make sense how that
Yeah.
goes? And hence the reason why when people ask me, would you ever buy or would you advise me to buy an ETF? No, absolutely not. Not your keys, not your coin, And I think it's so important for people to realize. That said, I still am happy that this is happening because it's changing the business culture, it's changing the political culture, and it's changing the personal financial culture for people to say, I want hard money.
Hmm. Okay. Yeah. So I have a video here that I'm gonna pull up real quick of Michael Saylor talking a little bit about his ideas on what's going on. So I'm going
Yep,
to play a little bit of this.
go for it.
This came from Jack Spirko, reposted this. So
Available to the public.
I'll post this for a little. Listen
Sure.
to this for a minute.
Well, I think I'd start just with Bitcoin. Bitcoin is certainly at least digital gold. It's going to eat gold. It's got all of the great attributes of gold, and it's got none of the defects of gold. If you could teleport gold from New York to Tokyo in a few minutes, people would like it. It's going to divert capital from risk assets and risk ETFs like SPY, and you can see that these ETFs are doing that. It's going to be incorporated into a lot of funds like the BlackRock Global Opportunities Fund or the Strategic Income Opportunities Fund. And so as it's an asset class, as it goes into other funds, it's going to become structural. The halving is going to cut the organic supply of natural sellers in half around April 20th. That means there's only about $32 million a day of natural sellers. And the price of Bitcoin is going to have to adjust up in order to meet that investor demand. So I think that's what's going to happen next to the asset class.
In terms, though, of how investors should think about your company.
All right. So one of the big quotes from this as well is that he's saying we're buying it to hold it 100 years. That 66 to 16K crash that shook out the tourists.
Yeah.
So, I mean, Michael Saylor, this guy is in it for the long term, and talked a little bit about, some of the things that we were just talking about there.
Yeah. Yeah. What I really like about him, I think he's such a deep thinker. A, he's such a deep thinker, and B, I think he's a master at creating accurate narratives, right? I can speak technically about stuff, but he is really good about taking something's technical and making it relatable to pretty much anyone who's willing to listen, and the whole idea of taking, inverting our way of doing things, because right now fiat money, fiat currency makes us think in terms of short term, right? Well, with gold, which I love gold and I love Bitcoin, good money is very much a civilizing force because it motivates us to think of the future. And fiat currencies are a decivilizing force because it forces us to think of, it compels us to think of today, not tomorrow. And I think that Michael's done such a great job of kind of encapsulating that, not only in his thinking, but also his speaking and his actions, his behaviors are very much reflective of that mindset of like, I know that this thing that I'm holding, this fiat currency, is a melting iceberg, right? So I'm going to get rid of it as quickly as I can and go for the hardest asset known to man, and hold on that, which, by the way, happens to be a really good form of money. And so he's building a company. If real quick, if Bitcoin went to $5 million per coin, all right, a little bit of stretch, but let's just say it went to $5 million a coin, and MicroStrategy is holding 200,000 Bitcoin, a little over that. That's $1 trillion in free cash just sitting there, if you think about that, right? His company will be the only company that does that. This is not market capitalization. This is not the market capitalization of the stock of MicroStrategy. This is $1 trillion sitting on MicroStrategy's balance sheets.
So here's a question for you. This is something I've been thinking about for a while, and thinking about where Bitcoin is going and the potential that it has. What are people gonna do? Like, is this a great opportunity to flip the script on the agenda of things rolling out? Is like,
Yeah.
are there going to be opportunities here for people to, say, invest in some equipment or buildings or things like that they could create some kind of enterprise or things out of this move? Or
Yeah.
if you just have some Bitcoin, are you just going to be able to get by maybe just a little bit better than everybody else is getting by?
I don't think it's an either or. My personal opinion is I think it's both. They're equally valid, right? So if we take a look at we take a look at the broad spectrum of people, just humanity, right? And we have all different types out there. We have those who they're very risk averse, and those who actively look out for risk, right? And then of course the other spectrum is, how do they handle it? Do they handle it well, or do they mismanage it completely, right? And I think with something like Bitcoin, it is a great asset for helping people reflect what their values are. And this is why another reason why I'm such a proponent of Bitcoin replacing all these fiat currencies is because government basically makes all the citizenry of those countries makes them, it forces their values and philosophies to be subordinate to government's philosophy and values, right? And so if we move towards a hyper Bitcoinization world where Bitcoin is the base layer, if you will, then people can do whatever is appropriate for them, right, in the moment. And so let's take a look at the typical portfolio that's constructed for people as they go through life. Maybe, and we're talking about stocks and bonds, right, equities and securities, right. And there's always that mix. When you're young, you can have 90% stocks and 10% bonds, and as you go on throughout life, that inverts, right. And so
Yeah, because you want to distribute the risk. They say that
that's right.
when you're older, you want to go into something that's more secure, that gives a steady, uh, whatever payment or whatever growth. And then
That's
younger,
right.
you take higher risk and stuff that's maybe more volatile, but gives you a lot more growth.
Yep, exactly. And so that on average, I think that's a good plan, right, for many people, because it is a reflection of where they are in their life, and it's a reflection of demographics, right? Because as we're younger, we are more risk oriented, or we can take more risk, we can take more losses, and as we get older, we can't take those risks, we can't take those losses, and it's about wealth preservation. Before it's about growth, the other one's about capital preservation. I think it's so important, and we can extend that to the different types of personalities that are out there. I think that's important. And Bitcoin allows us to do that. So let's provide some historical context for this. Prior to um, really August 15th, 1971, interest rates were much higher on average, right? It was not uncommon to have interest rates somewhere in the range of 5 to 10%. And we think, oh my gosh, 10%, that's crazy. And even before that, right, it wasn't uncommon to have interest rates or even higher than that, 15, 20, 30%, many times for sovereign wealth, right? Um, and that's because the lenders and the borrowers were dealing with hard assets, gold and silver, right? If you wanted more gold and silver, you had to actually go mine it, right? So they demanded that there be a significant risk premium that's built into the interest rate in there. Well, now, and we've all seen this, right, of especially 2008, 2009, governments are just going to go in, they do bailouts left and right. They privatize the profits and they socialize the losses, right? So these institutions can entice the market with much, much lower rates, knowing that even if they lost the money, the original principal, they're going to get a bailout anyway. So I think that we're starting to see things flip. To kind of bring it full circle to what you're asking about is, if we have a hard money standard, what we see is that the market becomes very stringent with their standards of when they're going to lend out money. And interest rates are almost like that perfect, to borrow from quantum mechanics, the perfect set of Feynman diagrams of all these different possibilities coming together into a single spike of reality, right? Where it's like, okay, 10% is the interest rate that we're going to charge for this loan or this type of loan, right? Because of all these different factors out there. What is the risk-free rate? What is the risk of default? How much profit do I want to make? So that all converges to a single number, right? And when we have a hard money standard, the market is going to say, hey, if I'm going to take this risk with my hard-earned money, then you need to pay me more. And the market will not only will they charge higher rates, but they're going to be more stringent in doing their due diligence against the borrowers, right? And as it stands right now, we're getting right back to the 2008, 2009 regime, right, where we had Ninja, no interest, no job application,
Yeah.
right? No doc, right? No verification. Oh, we have some money. You want some? Here, take it at 3%. You lose it, fine. We'll go get some more, right? And these institutions made money by making money. They didn't make money by risking it. They made money by making money, right? Forging money,
I
right?
mean, do any of these guys even hold anything really at the banks when they're giving out the loans? I don't even think that's even real.
Exactly. It isn't, right? And we've talked about this before, right? There's the whole rehypothecation of fractional reserve banking, right? Is increasing the M1, the M2 money supply through the bookkeeper's pen. That's all it is, right? There's no tie to the second law of thermodynamics, right? At least with gold, there is that tie to the universe, to reality, right?
Right.
So to
Yeah.
kind of bring it,
Yeah.
I'm sorry, go ahead.
Energy can't be created or destroyed. It can only
That's
be
right.
converted from one form to another. They're not obeying that at all. They're just
Exactly.
inventing some new digits on a screen
Yeah.
and saying it shall be done, and you owe us the money.
That's right. That's right. Exactly. So we didn't offer anything of true value. And so we're going to give you something, and then we want you to pay back in more of those units and the principal, right? And that the interest that we earn, that's the VIG, as the mob would say, that's the VIG. We earn that on top of this other thing that has no basis in reality, right? And so I think that what we're going to see is going back to that spectrum of humanity, right? Um, I think what we have seen over the past 100 years is government telling the citizenry, you must subordinate your values and your philosophy to our values and our philosophy. And by offering this bad money, this fiat currency that's out there, right? And the people had no choice in the matter because they were going to be forced to engage in a bail-in whether they wanted to or not. And now, if we have a hard money standard, as you saw in the first Age of Enlightenment, and that we saw in 1871 to 1913, with a true gold-backed money, gold-backed currency, um, interest rates are higher, and loans were much more stringent. We go back to I remember my parents were when I was a kid, they were telling me about different types of loans for mortgages, and they told me about something called the balloon payment, and it blew my mind. Like, wait, you're expected to be able to just go through, pay the interest for so many years, and at the end you're supposed to be able to just pay off the entire loan at the very end, pay all the principal. That blew my mind.
Hmm.
Come to find out, if you go back 150 years, short-term mortgages with a balloon payment, that was the norm. Now it's completely inverted. We have these 3, 5, 7 year loans that where you just pay the interest on the principal, and at the end you're expected to pay off the entire principal at the very end, because the idea was that the individual was saving up principal for those 5 years, and then boom, they pay the whole thing off, right? And
Huh.
and so my point with that is, sure, interest rates have gone down, but that means the term of the loan has gotten longer and longer, right? So we've
Yeah.
inverted our values because of that, and we're seeing this now in the auto market, where auto loans are lasting longer than the expected life of the vehicle.
Wow.
Does that make sense?
Yes, yes. So they've lowered the interest rate, but they're still winning the game because they stretch it out for a longer period of time.
That's right.
You're
Yeah,
not paying down the principal, you're paying more on interest, and
yeah,
the banker's still winning.
yeah. And so we've lost this motivation to engage in due diligence. So let's take it out of the realm of real estate or auto loans. Let's take it to what you alluded to before, which is, I think, very accurate, very very good context, is investing in capital equipment, investing in a company, right, to build something up, right? And what do we have now? We have SPACs, special purpose acquisition companies, where they just throw money out there and they just buy stuff. They buy junk, buy a crap. Whereas before, whether we liked them or didn't, the Carnegies, the Rockefellers, J.P. Morgan, all right, they had they had a decent amount of money, but they were also very diligent in the way that they lent out money, right? And they really want to make sure that their money was going towards something that was going to be um, not just profitable, but actually sustainable, right? That was kind of the original sustainable model, right? And so, yeah, they're going to charge more in interest, but they're going to make sure that the borrower can actually do what they claim that they want to do. And I think that's what we're going to go back towards. That example is, yes, we'll have higher interest rates, but we'll have more successful loans, and we'll have what Ludwig von Mises called malinvestment. We won't see nearly as much malinvestment going forward as we do today.
So another devil's advocate
Yeah,
question here.
I love it. This is good.
So say, a lot of our stuff gets tied to Bitcoin in some form. Like I was mentioning earlier, that what are people going to do now that, or what is an area of thinking that people could adopt that would help them in their personal lives? In my opinion, um, it's good to hold an asset, but that Bitcoin just sitting there, is that the move, or is it better to utilize that towards some kind of a productive enterprise
Yeah.
in the market?
That's a very good, very insightful question. And I get this quite a bit. Is there's kind of this constant like, okay, there's this gray rock called Bitcoin. What do I do with it? Right? You're saying this thing's gonna be so valuable, but I can't buy a cup of coffee with it, right? So that's a very valuable question. If I could give an analogy of buying raw land, right? And so we're in Huntsville. You and I live near Huntsville, and so we have seen that Huntsville has grown a lot in the past decade. I mean, just some of the most explosive growth in the country in the past decade. And so if you take a look at the 72 corridor, 231 corridor, Parkway corridor, and the 431 corridor, right? There's a lot of real estate development going on there. And so what people are doing is they're actually getting ahead of this curve, and they're buying raw land, or sometimes they're just buying farmland, stuff that has had zero engineering to it, zero electrical, zero plumbing, zero civil engineering to it. They're just buying land just to hold it. And if you think about it, there's a cost associated. There's the opportunity cost of holding that land, and then there's the maintenance cost slash the tax associated with it. So people, why would you buy that, right? You're just sitting on this. It's not to go with Warren Buffett and Charlie Munger. It's not a cash flow asset, right? You're not generating cash flow. Therefore, it's useless, right? So I think that while I really appreciate Mr. Buffett and Mr. Munger, I think it's the wrong attitude to have. Just because something's not cash flowing doesn't mean it can't be valuable, right? And so what people are doing in the Huntsville area is they're buying this land, this raw land, in anticipation of, right,
Development out towards that raw land.
That's right. That's right. And so if we talk about plumbing, there's the electrical plumbing and there's the water plumbing, right? The fresh water going out and sewer coming back, right? All this plumbing is will be put in, right? So I think that for many people, buying Bitcoin now and just holding on to it, understanding what the fundamentals are, the economic fundamentals, and you talked about Gresham's law. That's one of the best fundamental drivers of Bitcoin, right? If one were to buy Bitcoin, they're buying raw land. This is like buying Manhattan in 1491, right? For like pennies, just pennies per acre, right? And you just hold on. And that's kind of what Michael Saylor's talked about, right? I'm buying something for pennies on the dollar, essentially, for today, and I'm just holding on. And in his ideal situation is, I will never ever sell my Bitcoin. I will merely continue to borrow against my Bitcoin, whether it be for more Bitcoin for expenditures, capital expenditures, or I think what you talked before, capital, right? I'm borrowing Bitcoin to avoid the tax implications, but I'm going to borrow for capital expenditures. So I think that's kind of what we're seeing now.
Wow. Okay. Yeah. So for a while, I had thought that might be a play that a lot of people would use with Bitcoin, especially if it can, as Bitcoin is the honey badger and
Yeah, right.
you can't kill it. You know, as it proved itself more and more that at a certain point, people just holding Bitcoin can use it as collateral and just borrow against their Bitcoin, and like you're saying, never have to dissolve their holding of their Bitcoin.
Yeah, yeah. If I could kind of piggyback on this topic, I get this question a lot: is when will you cash out, Jay? Or Jay, when should I cash out? And I say to them, no offense intended, but if you're thinking about cashing out, then you don't understand Bitcoin, and I'm advising you not to get into Bitcoin. Because what's going to happen is they won't be able to take the ups and downs, the volatility, because the volatility on Bitcoin's huge if we price it in dollars, right?
Well. I mean, a lot of people are told like take profits when you can. I mean, like
That's right, exactly. And I look at it from the point of view of um, come for the finance, stay for the freedoms, right? And so maybe the hook just to get them in the door is to talk about the dollar valuation of Bitcoin. But what I'm really trying to do is to promote the idea that you never want to cash out of Bitcoin, right? Or if you are cashing out, you're not cashing out, you're not trading your Bitcoin for dollars. You're trading your Bitcoin for a laundromat. You're trading your Bitcoin for an equity stake in a company, right? And that would be, in my opinion, that's when we've reached hyper Bitcoinization. Is, we talk about the three functions of good money: storehouse of value, medium of exchange, and then unit of account. When things are being priced in Bitcoin, that's the indicator. People ask me, when's this going to happen? I can't give you a date, but I can give you the signs. The signs are when we've gone through storehouse of value, which is where we are right now. We're just starting to move into a medium of exchange, payment rails. And then the final thing is unit of account, is when we price things in Satoshis or Bitcoin, right? When we do that, okay, we may be in the promised land. And so that's the thing that I'm trying to change or give people a different way of thinking about this, right? Don't value it in dollars. Dollars is just the report card for how right we are, right? Think of Bitcoin is hours of your life, and you wouldn't just open up your veins and just spew your blood everywhere, because that's your life. Well, that Bitcoin is a representation of hours that you've worked in your life, and you wouldn't just piss it away, not voluntarily, right? Government does it all the time, right? But we would never voluntarily just piss away hours of our life like that. We guard it so stringently, and we lend out hours of our life. At least I hope we do. We lend out hours of our life very stringently, and that's the same standard that we should have for Bitcoin.
all right, Jay. Another devil's advocate question.
Okay, you're doing a great job. I love it.
So, would someone be able to say, okay, I know you have Bitcoin.
Yeah,
I'm going to come to your house and I want to figure out how I can get your Bitcoin from you.
yeah. This is a good one.
What is the strategy here? So, do you buy it anonymously? You don't tell anybody about it? What do you do?
Yeah. So
Lost it in a boating accident?
yeah, right. So that's another good question I get, and I'm glad to bring this up. So okay, so you and I have a very different. I'm sorry, you and I have a very similar attitude around. I'm going to call pre and post, right? You know where I'm going with that, right? At post event, right? Um, and I think the audience can understand what I mean by pre and post, right? Um, and one of the things that people who are like us, they'll say is put up a lot of decoys, right? And so whether it be a decoy wallet, I carry two wallets, by the way. That was a habit I got into when I was living overseas. I carried two wallets. One that had like 20 bucks in there and a couple throwaway IDs, and then my other real wallet, you know. And so I think it'd be a good idea to have two wallets, right? A decoy with a few, whatever, and then your real one out there. So I think that that's good. Same thing with safes, right? If you insist on getting a safe, which I think is a good idea, you keep your one safe off the side. Nobody knows about it except for immediate family. And then you have this other one that's easily found. All right. That's one thing. And also make sure that they're both password protected. Because if you make the honeypot too easily broken into, they're going to figure out, oh, this is too easy. And then what the other thing you said, which is spot on, is only tell people who you think you can trust, right? So I don't tell anyone how much I own in Bitcoin, right? But then again, I think that's the same with what we do in finance, personal finance anyway. We don't talk about, oh, I have this amount of money, right? I think it's just a good idea not to talk about it. I also think it's a little crass, but that's just me. So don't talk about it unless it's people who you can trust, or as I have a Bitcoin meetup group here in Huntsville, is the idea of trying to find like-minded individuals, right? And we work with them to try to help them see what's the value of Bitcoin. So now we all know about the $5 wrench attack, right? Unfortunately, that's just a reality. But when it really comes down to, for the whole concept of pre versus post, it's always about risk mitigation, right? Always taking reasonable steps to mitigate risk. We're never going to eliminate it. It's like in IT, right? You know this. You're never going to get rid of viruses. You're never going to get rid of worms. You're never going to get rid of Trojan horses. It's always about risk mitigation. What are the reasonable risk mitigation efforts that we can take?
We're the ones that are the worst on our own security and
That's right.
keeping things from
That's right.
from happening usually.
Yep. Yeah, we are our own worst enemies, unfortunately. If I could bring one more concept to the table, and this is something I learned about, at least in terms of a formal concept. It's in The Sovereign Individual, the book. I think it was by Davidson and Rees Mogg. I think it was the two authors. It was the idea of the logic of violence, and that is, what is the cost of engaging in violence versus the profit of that violence. And when the cost is low and the profit is high, you're going to get a lot more violence, right? Versus if the cost is high and the payoff is little, you're going to get very little violence, right? At least a fairly rational thinker is going to follow that. You're always going to have your exceptions, right? The desperate people. And so what I love about Bitcoin is that if people follow good principles, guidelines around securing their Bitcoin, and it's not that hard, it really isn't, then they can raise the barrier for the cost of trying to intercept that Bitcoin or take it, and much higher than the profitability of getting that Bitcoin. And that goes not just for individuals who may be acting nefariously, but for governments that may act nefariously. In other words, the total Bitcoin is going to be so diverse and diluted on an individual basis that the governments would have to expend an inordinate amount of effort to go out there and get it on a one-to-one basis, right? And I think that's part of the beauty of Bitcoin, is that because of SHA-256, which is the encryption algorithm used in elliptic curve digital signature algorithm, the cost associated with that, of either breaking the code or using a brute force attack, or going out and using a $5 wrench attack, regardless, the costs are going to be so high and the payoffs are going to be so low that it's not worth it.
Now, Bitcoin is a public ledger, so anyone that can see that transaction has happened, I guess in a way it's pseudo anonymous, but
That's right. That's right.
once that is revealed, then and that's tied to who you are, then
Yeah.
then
So
then you can be under more scrutiny there. I know there are tools to help you get around that, or at least obfuscate your identity a little bit better.
that's right. So you're spot on with that. And what we've seen. So I need to do more research into this. All right. So full disclosure, I'm speaking as a person who hasn't done it, but I know people who have, and it can be done. There is the proof of concept out there. So some people use Monero as a way of hiding, or I should say, moving their Bitcoin from one wallet to another. Okay. Another are there's a normal Bitcoin function called a coin join, all right, and that's a way of taking Bitcoin from multiple streams, putting them together, and then redistributing it back out to certain wallets in a controlled fashion. So it obfuscates the origins of those Bitcoin, and so that way when it goes to these new wallets, they all look like they're equally culpable. Thus, none are culpable, right? For the origins, right?
Yeah,
And then
plausible
finally, there are a
deniability.
ton of services out there which can really obfuscate this stuff. So there are really good tools that are out that are available, and um, I'm a huge advocate of that because I'm a huge advocate of privacy, and I have no moral obligation to provide, and I nor anyone else has a moral obligation to provide exposure to my personal data just because another group of people out there says I'm obligated to do so. No, I'm not obligated to do that, and I'm going to take every reasonable action to do that, to obfuscate that ownership.
Wow. Okay. Yeah, I have talked about this on the podcast in the past. Is that is the importance of privacy coins, and that if you are getting somebody coming down on you, like the IRS or one of the agents of the state or something like that, that those privacy coins, you could move some of your assets or whatever that they've been tracking, if they've been tracking that, into something like a privacy coin. And I don't know what you guys are talking about.
Yeah, yeah, it's like we just said before. I lost my Bitcoin in a boating accident, right?
Right.
There's one more thing to this that it's a thesis that I've been working on for a while for my upcoming blog, and that is that if we finally are able to get to a hyper Bitcoinization world where fiat is either completely dead or fiat currencies are completely dead, or they're very much on the fringe, and governments have to tie it to Bitcoin in some way, shape, or form. So they have to create some sort of good money. Then what we've essentially done is we have essentially evaporated or pulled the lifeblood and air of tyrannical and authoritarian government away from these states. And so, in my humble opinion, what enables governments and states to act so perniciously and without any sort of accountability to the citizenry is the two-headed hydra of inflation and debt, right? And these governments are able to fund both their operations and their capital expenditures, right? Building these massive NSA facilities, right? Because of inflation and debt. And inflation and debt allow governments to extract value out of our wallets on a real-time basis, right? And I think that's so. I think that's so important for people to realize. It's so under the hood that most people aren't aware of it, so they don't even know that there's something to fight. And so, if we are able to go to a hyper Bitcoinization world, um, countries, this is my speculation, right? Countries will not be able to engage in nearly the inflation and debt Ponzi schemes that they've been engaging in for over a century now, and I think that's going to um, take away so many of the functions of government that we see today. For example, extra constitutional law enforcement activity, extra constitutional military activity, extra constitutional regulatory activity. The reason why I'm saying all this is because people get ask me this question about, like, well, can't the government just send agents to your house to go get this stuff? Well, who are they going to pay? With what are they going to pay? Because if they have this thing called the dollar and it's worth bupkis, if it's worth nothing, who's going to take the money? Who's going to take that compensation when what they're paying is garbage, right? So they can put all the regulations and mandates and laws they want out there. Okay, now let's see you enforce it.
All right. Well, brings me to my next devil's advocate question, which is, So this recent interview came out with Whitney Webb covering some of the recent stuff going on with Bitcoin, and she did bring up some interesting things to think about. Is that moving into whatever, these guys that like to think that they're in control have pulled several schemes over the years, and people voluntarily kind of sign up to go along with it. Talking probably the 1971 breaking off from the gold and then going balls to the wall before, way before that. There's the 1930s technical probably default on the U.S. government and the currency back then, and from the creation to the Federal Reserve back in 1913. All these things were kind of like changes in the game, and I guess the people that consider themselves the chess masters have designed everything so that everyone just kind of falls into the next thing that is their plan, the kind of the problem, reaction, solution thing. So, thinking of that in Bitcoin, is there a scenario that you can think of or a way that this may play out where Bitcoin is used to bring about a digital currency scheme tied into Bitcoin in some way, and the government's using some type of digital asset and basically only another like by decree asset or by decree currency system that you have to use this as the legal form of money.
Yeah.
And maybe Bitcoin is the underlying thing around it. But you got to do your biometric scan to use whatever, something like that in order to act and trade and do whatever we want.
Pay your taxes.
Yeah, do the things that you want to, so we don't mess with you, kind of stuff. So, yeah, that's maybe one of the scenarios. Like a lot of technologies are a double-edged sword, and I am a Bitcoin guy. Like I like Bitcoin a lot.
Yep.
But are we being led by a wolf in sheep's clothing? Are there concerns? Are there things that we should be thinking about as this progresses here?
Yeah. So full disclosure, I really like Whitney Webb. She's a really sharp individual, and I think she like with some sort of a legal defense institute. I forget which one, but it's something that has to do with kind of providing some legal defense around Bitcoin. But I saw a talk with her online, and she's a really sharp person. I know the video you're talking about. Unfortunately, I didn't see it yet. But I kind of surmised from the title that's kind of what she was talking about, is there could be a backdoor of power grab. Is that right? Am I saying that correctly?
Yeah, I can bring it up. I could play a short section of it for you real quick.
Yeah, that'd be great.
All right, let's pull that up and let's see here. I can't remember exactly, but it probably around this area. Let's kind of see.
He's an exchange commission to investigate BlackRock's push into ESG policies, stating that it hurts state pensions as well as the oil and gas markets. So, did Fink, like the good old boy he is, just quietly abandon well-laid plans that, if executed properly, would help the global elites achieve their plans of having us own nothing and rent everything, including the clothes on our backs? We think not. Whitney warns that all of the plans by members of the Global Financial Alliance for Net Zero, GFANZ, to reimagine and recreate the global financial governance system are still in place. She adds that the co-opting of Bitcoin is one of the first steps in achieving the grand goal of creating a new financial system, which GFANZ co-chair Mark Carney believes should involve new multipolar currencies, such as CBDCs and global carbon markets. During her interview with Peter, Whitney further warns about ongoing efforts to rebrand BlackRock, the World Economic Forum, and other related organizations, so they would seem harmless and completely dedicated to serving the masses. Here are more clips from the discussion.
Larry Fink, among other things, is on the board of trustees of the World Economic Forum. And I think the World Economic Forum is misunderstood by a lot of people, and people use certain terms to refer to what they are and what they do. But ultimately, what that group is about advancing the public-private partnership model. And of course, there's two sides to that, much like there is in the prevailing left-right paradigm of most countries' politics. And, for a long time, they've leaned sort of on the public side and used talking points that are meant to appeal to the political left, and have gotten a lot of pushback as a result. And so if you notice, people like Fink, but other people as well, have moved their rhetoric away from those seeking to appeal to the political left in the public side of the public-private partnership, leaning into the private aspect of the public-private partnership and having more right-leaning talking points. But ultimately, all are trying to lead you to the same exact system of digital ID, programmable, surveillable money, and global carbon markets. And I think, the carbon market in particular, it's sort of hard to extricate that from the climate change, situation. But I think it looks like, people like Fink and some of the people in that particular space are going to attempt to market it as something that can make people very wealthy or allow them to get quick access to capital by tokenizing their land holdings and like fractionalizing their private property, using different things that haven't been able to be financialized before, and then bringing that on chain and using that as collateral, receiving loans that way and all of that. There's a lot of ambitious plans in that particular space. And aside from that, there's been this push led by the Rockefeller Foundation and some other groups through this whole push for natural asset corporations, where they basically openly talk about the idea to expand the amount of assets in the existing financial system by like 5 or 6 fold by incorporating what they refer to as natural assets. So this is sort of like the financializing of the natural world and turning, allowing people to.
So that's, I know you haven't seen that, but
I think that was a good representation.
That was kind of a summation of some of the things that she was talking about. There is tokenizing and creating collateralized assets based off of digital things, and using digital IDs to be like the way you access all that.
Yeah. So like I said, I have an enormous amount of respect for Whitney, and she has a very sharp mind. I will say this: if she's bringing it up as a concern, I take it seriously. I'll say that.
Yeah.
Okay, so we talk about tokenization of stuff, and I was just talking with a gentleman on Saturday or Sunday about this idea of NFTs, non-fungible tokens.
Mm-hmm.
The whole thing about doing it for art or songs, I don't really care. They're the Pepes and Bored Apes, blah, blah. I don't care. That means nothing to me. What I care about is, at least my base case is around not just stocks, company stocks, but individual shares of a company's stocks, and not just bonds, but individual issuances of bonds, right? So all these different shares would be numeralized, and there would be a token that goes along with each individual share of a stock, right? The reason why I say that is because we saw back in 2008, and we've all probably seen the movie The Big Short, right? Dr. Michael Burry went through all these MBSs and CDOs, and he looked at the underlying assets for all these things, and he saw that they were non-performing, right? And then institutions can take these CDOs, CDLs, and MBSs and use them as collateral for borrowing or as margin against other trades. And so now we have a derivative, like you talked about before, a derivative of a derivative of a derivative, right? And so after a while, part of the problem is there was so much counterparty risk out there, is that institutions didn't know who owned what. They didn't know how to trace, right, who owned which real underlying asset. So how do we take something that's 1616 Mockingbird Lane, this house, and trace it through the system? It's held as a collateral through like 3 or 4 or 5 layers of counterparty risk, right? And so we did the same thing with stock and bonds, right? If someone wants to borrow money, and this could be for anyone, people can do this. They can pledge shares of stock, right? If they want to open up a company, or they can do this, I think, for mortgages, that sort of thing, and it's totally legit. And the problem though is, because it had been pledged so many times, we get rehypothecation, right? We get essentially not just fractional reserve banking, we actually get shadow fractional reserve banking, right? That was the under the hood shadow banking that went on, and a lot of it went on with prime broking, right? Prime broking being the bankers of the large institutions, right? What we call kind of OTC, over the counter sort of stuff going on. So what if we had a way of actually seeing which, not just that there is IBM stock in this CDO, but each individual share of IBM stock was actually numeralized, and there's a token that goes along with it. And let's say I want to borrow money from you, so I'm gonna, hey, I've got the CDO, I'll use this collateral, and you go through all the tokens. You say, no, someone else gave you that CDO as collateral for something else. That's already pledged somewhere else. I'm not going to take that risk. You got to give me fresh shares. You got to give me shares that you actually own, Jay, right? And so I think that if we went that route of tokenizing financial assets, but for the purpose of only one layer of credit, not like 7 layers of credit, but just one layer of credit, which I'm all for that, by the way, then we would get rid of a lot of the BS of multiple layers of counterparty risk. So that's the sort of thing. And by the way, I'm not saying the 2008, 2009 disaster wouldn't have happened, but I'm saying it would be of much greater magnitude, much less magnitude, I should say. And so I think that that's important for the tokenization. And by the way, we could say the same thing about real estate, is we pay these intermediating parties a lot of money, sometimes 500, sometimes 1,000, sometimes $1,500, just to do title search, to clear a title. Why?
Right. Yeah.
Why? Well, there's no good reason for that. If I tokenize my house and I put it on the blockchain and no one else has a lien on it, free and clear, I should be able to look that up immediately, right? And I pay my 25 cents in Ethereum gas fees, or whatever you want to call it, right? And I can look through, boom, it's free and clear. And by the way, here's the public key for my house, and here are all the instances of my house showing up in the blockchain, and no one has a claim on it, right? I should be able to do that, and I should be able to completely disintermediate all these title search companies, right? So stocks, bonds, real estate, the 3 biggest asset classes in the world, right there. So I know that seems like a little bit of a circuitous route, but I think you understand kind of what I'm building up here. Is the base case for tokenization is there's the possibility of tokenization being a good thing, and we're seeing this also with soccer teams in Europe, or football teams in Europe, right, where people can be, when they buy a ticket, they're given an NFT, and it's an NFT just for the fans of that football club, right? That's actually kind of cool. There's huge value in that, right? And that creates that fan interest in there. So I think that tokenization, that's the way it's going to be. And by the way, we already have that today in the real estate market. It's called a deed.
Yeah.
It's a piece of paper. You have to go to the county clerk's office and get the deed, and it's transferred along, right? And or an automotive title, right? When I fast sell you a car, I sign the upper line, you sign the lower line, and there's a value in there, and you go to the county or the DMV, and you show the sale, and that token happened, right? The piece of paper is the token of the vehicle. The piece of paper is the deed to the property, right? And so we already have that. We just need to change the way that we use it. Now, in terms of what I think Whitney's talking about, this is kind of what I was getting to before in regards to, if we have a hyper Bitcoinization world, right, where Bitcoin is the base layer, right, that would be M0, right, to use modern parlance, right, it's the M0 layer. And then also, to continue the modern parlance, we have M1, right, which is M0 plus a little bit of credit sprinkled in there, right? And we have M2, which is M1 plus some credit sprinkled in there. You can have that, right? But any time that a sovereign fund or a country or state, whatever you want to call it, the moment they start trying to print more tokens than what are actually tied to the base layer, the M0, is the moment that the market will dump those tokens and it will drive the value of them down. And so what we're seeing, what I think we'll see, is Austrian economics writ large in real time. And if we think that Silicon Valley Bank losing $40 billion in reserves was fast because people had access to the cell phones, if we think that was fast, wait until a hyper Bitcoinization world where people can dump trillions of dollars in a few minutes. I don't know if I'm vibing with you here for a minute.
So I think what you're saying is that, if these creations of these central bank digital currency type things
Yeah.
were to happen and they abuse the ability to, create the amounts of these digital currencies,
Yep.
then people will just abandon those and stick with something that's going to hold value.
Yeah.
And I feel like just like a lot of things have happened in the past, it's people willingly moving into the bad guys territory
Yeah. Right.
where the bad guys control the stuff, and unwittingly walking into the bad guys solution, whereas the good guys solution, maybe it's harder, it's less convenient, I don't know, but it's more it's maybe sometimes it's harder to go down the alternate path than what's the kind of the wolf in sheep's clothing path, where they're giving you lollipops and candy canes and
Yeah.
let me tell you the tale of the candy man.
Don't get your fingers banned with candy, right? I think you're making a good point. I think that, so let's take a look at Larry Fink, right? His evolution over the past 5 years. He was very much anti-Bitcoin, just outright anti-Bitcoin. And we're not going that route. Next thing you know, BlackRock is the largest Bitcoin ETF in the world, right? In literally 2 months, right? And so
It does make you wonder.
Yeah, exactly. He's not saying it because he likes
Why,
Bitcoin.
why
Whitney
is he
was
getting
right
in?
when she
Why is he
said,
getting in on that? Yeah.
yep, Whitney was right when she said they've gone from a left-leaning diatribe to a right-leaning diatribe, right? Of, oh, this is about freedom and we respect people's property rights. No, you don't. No, you don't.
No.
If we go to the World Economic Forum's website, and they've taken it down since, but we've seen the receipts. They've said something outright, just flat out. You will own nothing and you like it. It's just like what Carol Roth said in her book. You will own nothing, right?
Right.
And we have the receipts. If someone tells you who they are, believe them, right?
Yeah.
And we've seen the BlackRock, the Larry Finks and the BlackRocks. We've seen the DEI, or I call it the DIE, the DIE agenda, right?
Yeah. The
Right.
Boeing is going through a bunch
Yep.
of problems with the planes and everything because of
Exactly.
that.
Planes literally falling out of the sky, right?
Yeah.
And so this is where kind of the rubber meets the road, where political correctness bumps up against reality, right? It can only go so far. And Ayn Rand talks about this in Atlas Shrugged, right? She doesn't use the term political correctness, but it's the idea of bad philosophy bumps up against reality eventually, right? And I think that that's what we're going to see is, sure, they can have these designs, and it's not a conspiracy theory when they actually say it out loud, when they said this is our plan and this is how we're going to do it. So my point with this is there's no doubt that this is what they want to do. All right. The real issue is, can they execute against it? And this is why I went to the idea before, that when we talk about the hyper Bitcoinization world, where we have evaporated countries or states or governments' ability to inflate and issue debt ad hoc, ad infinitum, ad nauseum, we have really evaporated their ability to engage in immoral law enforcement and immoral military expenditures, right? And unfortunately, that's what we're seeing writ large, not just the United States, but all over the country. Like you take the G20, right? They're practically controlling the world with their immoral Leo and military, right? And if we simply choose not to participate, I know it's a hard row, right? A hard row to hoe. But if we choose not to participate in that, we are slowly pulling the air and the blood out of the state, right? And we're reducing their ability to engage in this pernicious activity. We're getting rid of their ability to pay the contractors, to pay the people to engage in immoral and extra constitutional powers.
Yeah, and a while back, I was talking to you about the ethical development of technologies, because I think especially in the area that we live in, and I was one myself at one point. I was a government contractor.
Mhm.
That a lot of these really smart people are working on projects that they think you know they're told it's going to be beneficial for
Yep.
maybe the person out in the field or whatever. That's it's going to keep them safe, and then in order to keep them safe, then keeping everyone safe and all this stuff. And um, I think that's like a really important thing that moving forward into the future, that I believe that um, if you are working on something and you ask yourself the questions like, is this really benefiting humanity, or is this causing more destruction, or am I creating like more growth and beauty
Yeah.
and truth in the world? You know, what to what end am I doing this thing? I think is an important question. And there's all kinds of developments of technology happening right now. And you look at the AI space, and you have differences in AIs that are programmed by certain programs like Google's Gemini, that
Yeah.
they had to shut it down because everybody was like, "What is this AI creating? Is
Yeah.
creating obviously false things from the
Yep.
prompts that we're giving it." And it's just one of the ideas of when I think about where we're moving into the future, is people really stopping and asking yourself the question on the things that you're working on, and is it really contributing towards the betterment of humanity, or more of the enslavement of humanity?
Yeah. And real quick about was it Gemini? Was that Google's AI? Is that right?
I think it's called Gemini.
So if I remember correctly, when that whole debacle happened and it finally unraveled in the market, I think Google lost $100 billion in market capitalization because of that. People were like, okay, you guys, what are you doing here? Come on, right?
Oopsie.
Yeah, exactly. And so I think that I think we're kind of saying the same thing here. Is this is where Ayn Rand really tried to push the concept of having good philosophy, having a good framework, right? And if we talk about, you have the major pillars of philosophy: metaphysics, epistemology, logic, ethics, aesthetics, et cetera. This is where good philosophy comes into play. Why it's so important, because in the way Ayn Rand defines philosophy is the study of man's relationship with reality, right? With the universe, essentially. And ultimately, to answer the question, are my actions and behaviors comporting with reality, right? Are they consistent with reality? And Gemini was a good example of bad philosophy. It was a good example of bad epistemology, of this entity called Gemini putting out garbage, and people saying, no, this is just a lie. It's just a lie. There's no other way to say it, right? And people are rejecting that. They're pushing back on it. And by the way, I'm very happy that they did, because it was so blatant, right? And it was almost very similar to the Orwellian newspeak, right? Well, we can rewrite history, we can rewrite the meaning of words, right? And that's kind of what we saw, and where there's complete lack of being able to construct good language that is concordant or that comports with reality, right? And so I think that's I think it's important, and I think that's why, to bring us full circle, in terms of the concept of good philosophy
Yeah.
and having something that matches with reality,
Right.
is we have the two channels, we have the two pillars. On the one hand, something we've all known really for hundreds of years is that I think Voltaire talked about, fiat currency always goes towards its intrinsic value, zero.
Right. Yeah.
While I don't believe in intrinsic value, I think his point is well made. And the fact that governments can just print money or just add zeros to a ledger, right?
Yeah.
And they can just keep pushing stuff out there, and that has no basis in reality, has no basis in the second law of thermodynamics, right? It has no basis in opportunity costs and supply and demand. Then we have this other pillar over here, right? Happen to be called Bitcoin, which it is inherently tied to the second law of thermodynamics, right? And when we talk about the idea that a currency has to be backed by something, I wholeheartedly dismiss that idea. That's utterly bogus idea that currency has to be backed by something. I don't want my currency backed by something. I want the thing, right? I want a bearer asset, right? So if I have a gold coin, the gold coin is the bearer asset. The gold coin doesn't need to be backed by gold. It is gold, right? I don't want my Bitcoin backed by something. I want the bearer asset Bitcoin when I present to pay, right? But if we're going to go down this rabbit hole of backing, right, we have the three functions of good money: storehouse of value, medium of exchange, and unit of account. And if we think about it, we can talk about it, Bitcoin being backed by things. So the storehouse of value is created by the miners actually mining Bitcoin, and they have proof of work. In this block, I have a hash in here, and I did the work to develop this hash, right, for this block. And that's tied to the second law of thermodynamics. Okay, so I had to do work in
Yeah, exactly. Work must be done for the thing to be
Exactly.
created. Yeah.
Right, and that goes back to opportunity cost, right? Those miners, they could have opened up a restaurant, they could open up an IT company, or they can do mining work, right? And they had to make that decision where to expend that. The second thing would be the payment rails, or the medium of exchange, right? And that is the Bitcoin network, right? And that can be represented by the code, the computer code, right? And the mathematics that underlies that, right? And that's what enables those Bitcoin tokens, which are abstracted, to move from you to me or from me to you, right? Is because those tokens are being hashed, they're being encrypted, basically, right? And I can move Bitcoin to you. So that is the second way in which there's a backing of Bitcoin. And then the final piece, the final function, is the unit of account, right? Well, what is that? That's all of us running a Bitcoin node, or we have a Bitcoin wallet, right? And we designate either in Bitcoin, millibitcoin, micro Bitcoin, or Satoshis. Or if you're running the Lightning Network, micro or millisatoshis, right? A thousandth of a Satoshi, right? And so that's the final piece of backing, if you will. So we have this stool, three-legged stool of backing. So if you think about it, I don't need one thing to back Bitcoin. I've got three things to back Bitcoin, and they're rock solid, right? But in whether we call it backs, or I have a bearer asset of a token that I give to you, to pay for services, either way, we have that epistemological basis.
Yeah. So you've done a really great job answering all my devil's advocate questions tonight,
I
Jay.
appreciate the fact that you brought these to the table. I'm like, all right, I don't get these questions as often as I'd like to. So those are really good.
Yeah, and we kind of went down a lot of, I mean, fundamentally it's philosophical is what it comes down to. The core
Right.
is having a sound as some form of a sound money is a kind of a moral issue.
Yeah.
Um, so it kind of gets into the kind of the moral, spiritual, philosophical aspect of things. But I keep wondering that I mean, wondering how things are going to play out in the future, and I really believe in that idea and that concept of create the new thing that makes the old thing obsolete,
Yeah.
and utilizing the tools that we have right now. A lot of the technologies, the things that are around, that can be used for good or they can be used for bad things, but to utilize the tools that we have available now to increase and enhance freedom in for humanity,
Yeah.
and currently utilize those tools as best as possible. Um, I think everybody has to stay vigilant. We do need to have conversations about the stuff and, where the possibilities may go. And, just kind of stay vigilant and keep pushing towards, um, you know, more freedom and self-reliance and, taking care of yourself and the folks around you, and keep working on yourself. If this is the first time you've heard about Bitcoin, you got a really great lesson here from Jay tonight.
I appreciate that.
So Jay,
Um,
thank you so much for coming on.
I
Um,
appreciate that, and thanks for inviting me in again. I really appreciate. I love the conversations, and I really hope that people gain a lot of value out of that. I just started reading Zen and the Art of Motorcycle Maintenance by Robert Pirsig,
no
and
way.
I'm
So
almost like
one of my somebody gave me that book,
sure,
and told me that it would be a good read.
yeah.
Sorry for interrupting.
No, it's fine. That's good. We can relate. And so I'm only about 20 pages into it. But what I really like about it is, and it's something you actually kind of touched upon, is the idea of having good philosophy, right? And what you just said a few seconds ago. And the husband and wife who had the new BMW motorcycle, they didn't care about how does this thing work? How do I maintain it? Right? They just wanted to work. And it kind of took me a while to understand what Pearson was talking about in there, in the sense that there are a lot of people like that in the world. They don't want to get into the philosophy of what's happening underneath. They just want it to work, right? And I respect that, right? I mean, how much are you gonna how deep are you gonna go with everything, right? You can't. At some point, you kind of have to trust, right? That's just the nature of a modern society, modern functioning society. I'm not going to try to understand how every part of a vehicle works, or every part of the banking system works, or every part of supply chain works, right? It's just not going to happen. But I think it was the deeper lesson that Pearson was going for is don't be afraid to go down those rabbit holes. Don't be afraid to tinker with your motorcycle and understand what's the proper gap on the spark plug, right? What's the proper mix of air to fuel, in there. And I think that what we've gotten into as a society is we've gotten philosophically lazy. We're constantly trying to offload certain things to other institutions, and this is something that's it's just human nature, right? It's happened for like 3,000 years, right? Where humans are trying to they just want to focus on a good life at home, right? And they just want a good family. They just want to be able to go to work and have a good family, and that's it. And they're willing to offload certain things to other institutions, whether it be states or banking institutions or security, whatever, right? So it is understandable if that's the attitude, but it becomes, I'm just going to turn off. I'm not going to be vigilant at all. And I think your lesson, what you said a couple minutes ago around, hey, we need to be freedom oriented. We need to be self-reliance oriented. How much that is, that varies from person to person. But just the idea that I can have my life oriented, at least be aware of it in some way, shape, or form, and maybe like TinkerTribe, right, is find other people who I trust, right, and who can help guide me, right? People who have shown they have the receipts, they have a proven track record. And I think that's so important. Is just that slight change in mindset that's so important. And if we I'm going to ruin the terminology. Whether we abdicate our responsibility and we abrogate, right, the powers,
I'm
right?
glad you said that. I was gonna get right into that. Yeah.
Yeah, that's it. So you know where I'm going with this, right? So take it from here.
Every responsibility that you shift off yourself onto another person, you're abdicating that over to someone else, and it becomes somebody else's responsibility at that point.
Yeah,
And thus you lose a little bit more freedom the more of those
yeah,
things that you give over to someone else. So it's important to, in order to become free, you do have to claim a lot of personal responsibility,
yeah,
and that comes with thinking, thinking about things, and how you interact in the world, and that the concept of the podcast is, when I created this thing, was, for the longest time, I wanted to plan things out and kind of to the ninth degree, and it got to like kind of an analysis paralysis point. And the what I wanted to do was just to start doing something and putting something out there,
yeah,
and failing and figuring it out as along the way. So that's what it's all about, or what it's become for me, is that just to do something. It may not be perfect. It may not be the best thing, but you've got to take some action, and you have to, even if it's messy, even if you're unsure, to get uncomfortable and attempt something, do something,
yeah,
instead of just sitting there and only letting these things and ideas be in your head. Like, get out there and take some action
yeah,
and learn those lessons by doing.
yeah. And be willing to take the hits. Be willing to be comfortable with being uncomfortable, right? Is what you talked about last week, right, in your podcast. And there's a great video of Peter Dinklage from Game of Thrones and Nip Tuck, and he talked about his struggles to kind of get to where he was in the moment. And he read a passage from a poem, and it had something to the effect of fail, fail again, fail better, right? And it's just continuing. You continue to push yourself, right? And we can sit here and pontificate till we're blue in the face about something, but after a while, you just got to go do it. And on a real quick side note, that if you actually read the full text of that poem, it's actually kind of a very dark poem, and it's very nihilistic, if you will. But if you take that one passage and listen to it the way Peter talks about it, in the context of living your life and going, and like you said, I just go do it, right? Just try it out. It's a very inspiring section of the poem. Fail, fail again, fail better, right? And it's like, yeah, you're gonna mess up. There's no such thing as perfection. The best we can do is just minimize our mess ups, right? Even professional athletes, they're gonna flub sometimes. But what makes them so good, the professionals, is they just minimize their flubs.
Yeah, and I'm no success story myself. I'm a 37-year-old guy living with my parents, but I
You're doing it, man. You're
what
doing it.
I'm
That's
living
a
it, but
success in my book.
what I am is, well, I'm listening. I'm listening to guys that have been there and telling me that you start something, and where you end up may not be even be your original thing that you started
Yeah,
with,
yeah,
but you started and you kept evolving as you went.
yeah,
And if you always waited for the perfect scenario to get something going, you'll never do it. So, I mean, these guys have a lot of wisdom, and attempting to kick myself in the buttocks and get some things done, you know.
I love it. I love it, man. So this has been great. I really appreciate that you ask in very engaging questions. You're probably asking questions that the audience wants to ask as well, right? So your ability to kind of discern and get the pulse of your audiences, I think it is very important. And also I think it's great that you're putting yourself out there, but you're also recording this for posterity, right? And I've been giving the links out to friends, and I've gotten some really good feedback, and people have been very happy with what you're bringing to the table, and what your ability to interview, right, to ask engaging questions, then just sit back, right? I think that's the mark of a good interviewer. And this will be something, I guarantee you, this is going to be something that you can look back and say, this is important. I did this, and I think that people around you will see that, and they'll know that, kind of like what Joe Rogan said, you build a mountain of achievements with one layer of paint at a time, right? And that's what you're doing. Every minute of your show is another layer of paint of credibility that you're building up, and I think that's really important.
Yep, you just got to get the reps in. It's all about
Yeah,
doing the
right.
reps, man.
And it's funny you say that, because right after I promised myself right after the show I got to go hit the gym. And today's leg day. And
Oh God.
today.
I just saw a meme of a guy doing leg day, and he's like, you thought you didn't push yourself that hard on leg day, and then it's like you didn't even feel like you got a workout. You're walking out of the gym, and
Yeah.
then it's like day two, it's like you're crawling on the ground because your freaking legs are
Yeah.
so
On
burned
leg
out.
day, I say I never skipped leg day. And then the day after leg day, I should have skipped leg day. Did you ever see? So you've seen the Joe Rogan podcast, Joe Rogan Experience Plan, that's right?
Oh yeah,
You
yeah.
ever see pictures of him not behind the microphone, just like standing with someone else?
He's very short.
Yeah, shorter than expected, but his neck is huge.
Oh
And
yeah,
somebody
yeah,
said, "You never skip neck day."
yeah. Oh man. All right. Well, Jay, hang around for a minute, but I'm gonna do a sign off here. Thank you so much for coming out. Like you said, do you have anything that you'd like to share with people where people can find you and all that?
Yeah, so if you go to meetup.com, type in Bitcoin, Huntsville, crypto, and coffee. Greg, I think you may have put the link into the description.
Yep, it's
Either
in the
way, if you
description.
use the link or you just look up Bitcoin, Huntsville, crypto, and coffee, you can see my meetup group there. And it's an online session. So it's every fourth Saturday, typically from 11 to 1. And we are getting people from literally all over the world now. There's a really nice gentleman who's coming in from India, and he's motivated. I'm really impressed with his level of motivation, self-education. So if this sort of thing that you're interested in, come join us. There's no obligation. It's just people like what you're doing, Greg. We're just sharing good information. We're trying to share a little bit of knowledge and maybe a smattering of wisdom with each other, and trying to help each other stay safe and stay self-reliant. Do that. And I also recommend, I don't know this gentleman, Robert Breedlove's podcast, the What is Money podcast. I really recommend it. You want to talk about going down the rabbit hole? That is a great podcast. I think he has about 430 episodes, and he does true long form interviews. Some of these podcasts are like 10 episodes long, where he puts head to tail several interviews with one guest. And Michael Saylor was his first guest. So if you like Michael Saylor, way to go. Yeah, that's what I really recommend.
Well, excellent. Thanks again for coming on. And if you guys found this of value, please share it with a friend, somebody that you think will get some value out of this podcast, and help help each other out.
Yeah. And thanks to
Subscribe.
the audience. I really appreciate the audience participation.
Yeah. So thank you guys for watching. We'll see you guys again next week for another episode, and Have a great rest of your week.
Thanks, everyone.